and welcome to this edition of Capital Market Live on Channels Television, where the market speaks and we analyze. I am Will Ibong. We kick off, as always, with global markets and see how they performed this week, especially on Friday. We see European stocks, they closed higher on Friday as international relations and corporate earnings remained in focus. Now, we see the DAX closed green at 24,538 points. That was up about nearly 1%. The FTSE is also up 0.15%. And we see the CAC 40 in France, 0.68%. It's been a busy week of corporate earnings, as I mentioned, in Europe. And with Friday, slightly quieter day on the earnings front before a flurry of companies report again, which we'll see next week. Now, President Donald Trump, that's the U.S. president, confirmed on Friday that he's naming former Fed Governor Kevin Walsh, who served at the central bank during the 2008 financial crisis, to succeed Jerome Powell as Federal Reserve Chair. Let's see how other markets fared, especially in Asia, where we saw that reaction with metals. Gold and silver prices fell Friday after hitting record highs a day earlier as investors booked profits after record-breaking rallies this year. Now, spot gold, we saw that price declined over 4% to 5,156. That's a steep drop per ounce. And now on the yellow metals, as copper, we saw that remain around 20% higher year to date. Now, looking at that, we saw that reaction with Asian stocks. Japan's benchmark Nikkei 225 dipped 0.1%. We saw it close at 53,000 points. And we saw Hong Kong's Hang Seng Index in China also down 2.08%. We saw Shanghai Index in mainland China also down 0.96%. Let's look at the U.S. markets and see how they performed on Friday. We can tell you that stocks retreated on Friday as technology shares remained in focus, even as investors largely approved of President Donald Trump's pick of Kevin Walsh to lead the Federal Reserve. And the S&P 500 looked to squeak out a January gain despite Friday's losses. We see that S&P 500 0.49% down. And we see the Dow Jones down 0.5% as well. The only outlier on Friday was the Nasdaq, and that was because of tech earnings, 0.92%. And let's look at now back home in Nigeria. We see the NASD market, the Securities Exchange, closed the week low. I think that's rubbing off on us here as well, as the index was down by about 0.25%, and that settled at, the index settled about 3,630 points. Market cap stood at 2.17 trillion naira. Now, trading activity, looking at that, volume was negative. We saw that down 34.1% to 15.04 million units traded, and we see valued also in negative 282.87 million, 282 million naira. And we also saw deals about 151 traded in the week, during the week. Now, on price performance, Air Liquide PLC was up 20%. That's a strong one for that stock to settle at 18.63 kobo. Now, NIPCO, we see that also up 17.95%, and IPWA PLC was also up 10.15% to settle at 2.17 kobo. On the losers chart, let's see who lost in the market on Friday in the NASD. We see that was led by Central Afriland Properties. We saw Central Afriland Properties was down. Afriland Properties was down 6.51%. We see Industrial and General Insurance also down 4.33%. And Central Securities Clearing System was down 0.76%. Let's move on to the NGX now and see how they performed at the close of trade during the week. I can tell you that it was negative 0.09%. And I can tell you that that closed at 165,370 points. That's a low for, well, coming up from 166. I wonder when we're going to regain that. And the equity cap, that's market cap, was, however, was in positive territories, was up 1.8% at 106.153 trillion naira. Volume was in negative. We saw negative trading. We saw that volume was 3.09 billion. We also saw value 81.5 billion naira, and deals 222,185. And look at banking sector. The outlier there was the banking stocks. We saw that index down 0.63%. Well, we saw upticks. Insurance was strong, 0.81%, and this was followed by oil and gas, 0.76%. Consumer goods was also up. Industrial goods managed to get into positive territory, slightly up 0.09%. Now look at the top gainers. We see Zich's Agro-Allied Industries. This stock that's just listed is beginning to make a quick comeback, a big, strong mark in the market, leaving its mark in the market. It was up 59.92% for the week to close at 4.19 kobo. Now we saw Omatech Ventures also up there, and UH Real Estate Investment was also on the gainers chart. Top losers, Nemeth Pharmaceuticals was down 26.04%, leading that pack of top 3 losers. Living Trust Mortgage Bank PLC was down 21.36%. May and Baker Nigeria was also down 19.54%. Look at top trades. Veritas Cap, that Veritas Capital Assurance led that chart. QTix was also there, and we saw Secure Electronic Technology also in the top trades list. Now, global markets are adjusting after that sharp swing we saw in gold, silver, and copper, and just as U.S. dollar is firming up, and U.S. President Donald Trump nominated Kevin Walsh as the next Fed chair. But to unpack what this means for Nigeria's currency, bonds, and equities, I'm joined by Ikechukwu Onyenwe, is the head of Treasury and Structured Products at Main Street Capital. Good evening, Sir Onyenwe. It's good to have you join us.
Always a pleasure to be on your show.
Let's just kick off with this nomination. You know, it's quite, I'm seeing markets are reacting to this, especially when they know that he is a hawkish, pro-hawkish kind of governor, that when he was, is still in the central bank in the U.S. there. But markets are already saying a possible stronger dollar as a result of him coming as the next Fed chair. What does this, how will this impact frontier markets such as Nigeria?
Okay, so I think it's important to look at the bigger picture. Before his nomination, we were talking about the tug of war, what we consider the global FX tug of war. And that was the tug of war between the yen picking up strength and the dollar's volatility. Then all of a sudden, the Kevin Walsh nomination. And the moment that came, some tagged it the market changer.
Definitely.
Because he is a hawkish maverick. He has worked with Ben Bernanke in 2008, and he's still in the corridors of the Fed. So as a result of that, we know that he's coming back. Yeah, Donald Trump has always wanted someone who would help cut rates even very faster than expected. And that's why he wants to replace John Powell, because he felt John Powell is not cutting rate. But with the information that is getting to us, it means that Kevin Walsh is not who he wants him to be. He's not dovish at all. So he is pro rate hikes.
Sure.
He wants to strengthen the dollar. And he also believes that inflation is sticky. And for that reason, and we saw how the market cheered when he was nominated. So now what are we? Well, let's not forget one thing. This is just a nomination. He has not been cleared
by the
by the House.
Oh, yes.
So the moment that goes through and he's cleared, then he takes the reign of office. That is where the international emerging markets will come into play. A strong dollar simply means there will be flows back to the U.S. because the yields will go up. And so you will see the tendency is there for the market to exit the emerging market and back to safe haven. So that's what we see.
Okay, so is this something that we should prepare? Is it going to be like a short-term shock where this happens, or is it something we should expect all year long?
Okay, so from all indication, it's going to be watch and see, because it's too early in the day to predict that that's what will happen. For instance, the U.S. dollar, the index that measures the strength of the U.S. dollar, the DXY, dropped into a demand zone. But people were already shorting it because it dropped below that demand zone, 96 points. And as technical traders would say, the moment a support zone is taken out, then you short it. But it was a fake out, because almost immediately the news about his nomination hit the market and it recovered. But it is not out of the woods yet. For the US dollar to turn bullish, it needs to take out 99 and 100. On Friday, it closed at 97.
Okay.
The strongest close in a while. So let us see if this momentum will be maintained or sustained, and it takes out 99 and 100, then DXY, the index measuring the strength of the USD, turns bullish.
So we know that historically that when the dollar is stronger, we see capital flows, like people leaving riskier assets or riskier markets like Nigeria and the rest of it. But I just want to know, maybe our audience would like to know, how vulnerable is Nigeria right now to this?
Well, our yields are strong, and it's quite encouraging. And the way the Nigerian market is structured right now, our foreign reserve, which is what the the investors would look at to see the strength of the naira, so to speak. So our foreign reserve is strong enough to hold out. And let's also not forget that our equities market is more of local players than institutional players. So that in itself is an insulation, protecting us from whatever the international community will be doing.
Okay, so if rates do stay higher, equities market, you say we have more domestic players in the market and less of foreign actors there. But if rates stay higher, are we going to see maybe a rush for possibly our euro bonds and other fixed income instruments?
So to start with, it depends on how the market reacts to. If there's a flow out of our system, our yields will go higher. But later, if it stabilizes at the point where it's interesting to them again, then they'll start coming back in. So what we are seeing for now, usually when pronouncements like this are made, there are knee-jerk reactions. So that's why we said, watch and see. As you watch the strength of the dollar, we are also watching the 10-year bond yields, that's the US bond yields, to see how far it goes. And let's also not forget that we have the Japanese yen and the Japanese bond yields to deal with. Because the last time the Japanese yen weakened to about 162, the weighted average of the 10-year bond in Japan was around 0.85. That was less than 1%. But as we speak, it has weakened to about 160, but the 10-year bond yield is already at 2.5. Okay, so dynamics have changed, and so we have to pay attention to all of this in totality.
So looking at the pressures right now in terms of maybe we're going to have capital flows or not, and pressure on the naira if the dollar strengthens, are we going to see possibly are we going to see difficulty is Nigeria going to find it difficult to attract, say, foreign investment into the country?
Like I said earlier, the foreign investors are looking at our ability.
So it's just gotcha, because I know that the Minister of Finance did say that we're looking at investments more than borrowing, than Eurobonds.
Exactly.
So if we have it difficult to attract investment because of the stronger dollar, or possibly because of volatility in the market or tensions, geopolitical tensions, how would that impact us really, especially our equities and bonds?
Well, for the equities market, it's been sustained. The strength is there. We can see the numbers are coming up. And we are in the era where there are recapitalizations almost around all the sectors. And then we can see fundraisers by some of these players. Public offers, right issues. Every player is trying to show up their capital. So that's good for our system. And you can see that despite all that is happening, the naira gained on Friday on the official window. So that's something to cheer. So no matter what the impact is, in the near term, we will not suffer the effect of what is happening. But as the play continues, let me put it that way, and the real policy direction or thrust of the new Fed chair is known, and the effect it will have on the global market, Nigeria is not totally insulated. But I don't think the impact will be as terrible as anticipated.
Just a quick one because we have to go on break right now. I know that a lot of Nigerians are holding on to gold right now. We see that volatility, that drop in gold and other metals. Is it still a good idea to hold on to gold, or is it a bad strategy right now?
Well, what we saw on Friday was what was called the bullion bloodbath. Gold has been overextended. Same with silver, metals generally. So the first question you would ask is, why were they buying them? Originally, they were dumping the US treasuries. China, Japan were dumping the US treasuries and were investing in gold. Now they have bought so much of it, it needed a pullback. So what we're seeing is not a bad sign. It is just a healthy market. Market is pulling back. The fundamentals have not changed. The macros are still there. So gold is still bullish as we speak. This is just a pullback, and maybe it will continue. It is only if it fails to take out 5,600, that's when we'll say, okay, the strength has failed, and maybe they'll start shorting.
And that's music to some people's ears. Up next, earnings on display on the NGX, but that's in a moment. Capital Market continues right after the break. Don't go away. Welcome back. It's earnings season, and some companies are already reporting, some impressively, others less so. We take a quick look at a few of them, and Ike Chukwuonye, who is head of Treasury and Structured Products at Main Street Capital, is still here with us in the studio. Ike Chukwu, it's been a busy week at the NGX. Yeah. We've seen a lot of inflow of reports. A flurry of reports have come in, and some have been good, some have not been. So which ones, let's say, start off with that, have been most impressive for you?
When you say impressive, I would look at First Bank, maybe for the wrong reasons. Let me start with their revenue growth and operational efficiency.
Would you say it's impressive, or that stood out for you?
It stood out for the wrong reasons. Because I saw the sharp drop in their profit for the year, and I checked. I saw the reason why. But let's start by saying that the revenue and operational efficiency in their net income, there was a robust 36.3% increase in net income, whereas on the non-interest income, both fees, commission income also grew, but by 16.5%. Now, their cost of management, operating expenses, rose to about 43.6%. And this could be attributed to inflationary pressures and increased operational activity. That's fine, that's business. But when it comes to profitability, there was an impairment loss, and it was huge. It was very material. It dropped.
And I'm sure that's what people want to know about. Why do we have that divergence between what they earned in the previous year on year, and comparing to 2025?
Exactly.
What was that huge impairment charge that they had to pay?
It was largely due to their provisioning, bad debt. You remember recently CBN was talking about, what's the term now? Forbearance. So most of the banks who are exposed are expected to make provisions. So First Bank is in the process of cleaning up its books, and they have gone ahead to make these provisions, write it off. So that's why they reported about 45 billion, because they took a massive hit making provisions for that impairment loss. So that's about 75.5% increase in their impairment charges. So that's huge.
But did that speak to the governance of the company, of First Holdco?
Well, with the way things are going and the recapitalization in play, all banks are expected to work on their risk management, their governance structure. So this, to a very large extent, will be seen as that. But some won't see it as that anyways, but they are trying to tidy up their house, so to speak. And I think they're doing the right thing.
Okay, let's move on now. Let's see, next up, we see Total Energy is not so impressive as well. What was responsible for that? What are the main drivers behind that?
Total Energies is now playing in a very competitive market. Dangote has come in. Dangote refinery has come in. So that puts pressure on them. If you remember, Dangote, in a bid to distribute better, brought in the CNG trucks. So that puts pressure on Total. And the loss, for the first time in about 6 years, Total declared a loss. As in, even they missed their 1 trillion naira mark from the previous year, just like the numbers here can show. So there's a lot they have to do internally now to compete, most especially with the likes of Dangote refinery.
Yeah, so if this is happening now to Total, will we see a rebound from this? Is there something in the horizon that shows that they're going to make a turnaround or turn the corner, possibly in the next year's books?
Yeah, I believe all of that is in the work. They're considering all of that. You know, like I said earlier, for the first time, they missed their mark. So they will definitely go back to the drawing board, so to speak. They have to look at how they can compete in the space where you have the Dangote refinery. So, and once all of that is, they are able to get around what led to the drop in their revenue, then they'll be able to put that together.
You know, we also have Aradel in that space.
Exactly.
As in, so there's competition in the space right now. So what is Total doing to try to swing back into profitability and probably stay competitive with local players like Aradel?
So Total, their marketing arm, they spent a whole lot marketing, and the pressures too from delivering as a result of Dangote refinery deploying. Dangote refinery was a smart move. They deliver products. That knocked Total out of their space. So right now, Total will have to go back and see how they can compete, how they can win back their own market share. If they are not able to do that, then this will be sustained.
Wow. That's not something we want to see. But Dangote Cement did deliver strong revenue and profits. Can you talk about the drivers behind that? For
Dangote Cement, if you remember something, their operations in Côte d'Ivoire, the operations in Ethiopia, they're beginning to add up to all the figures. But let us talk about their growth drivers and the reason for their performance. I talked about the CNG revolution.
But that is for Dangote refinery. Dangote Cement is what we're focusing on right now.
Their export strategy and FX neutralization was also a major highlight. They had like a 23% increase in clinkers and cement exports. Their volume increased by like 23%. And the reason is they shifted from a monthly FX deficit to a monthly FX surplus. Now, another thing is their strategic price management. They have been very, very good in managing this, and that was responsible for their growth in revenue by like 24%. The company successfully implemented their proactive price adjustment.
Okay, so let's just move on to Japan Gold. We can't talk about global metals, maybe swings in the market, and not talk about Japan Gold, which is our very own mining company here, gold mining company. We saw revenue was up, but operating profits declined. What was that? What caused that return from, because we saw them being on the path of profitability? That was the full year 2024, and then come full year 2025, we see that decline. What was responsible for that?
So originally, they were into maritime and oil. Now, there is a bit of a shift. They ventured into gold mining, even though they say that the operations will kick off in 2026. Currently, they said they're sitting on 637 ounces of inferred gold reserves, and they are finalizing exploration so that they can kick off. But in a bid to help them with cash management, they got a 26 billion naira contract to reclaim some areas in Lekki. So that helped their cash flow. But the dip you were talking about, let's also not take it in isolation, that they actually recorded negative cash flow in the year before.
Okay.
So 2025, coming back to a billion and maintaining that 1 billion, I think is a positive for Japan.
No, definitely. We will hope that they can maintain that. I know that we still have a lot to talk about. Maybe some other time on the show. We're already running out of time. Thank you so much, Mr. Ikechukwu Onyenwe. Ikechukwu Onyenwe is the head of Treasury and Structured Products, Main Street Capital Limited. Thank you for sharing your perspective on business, on capital markets.
It's always a pleasure to be on the show.
And that's a wrap on this edition of Capital Market. Remember, whether the markets are bullish or bearish, knowledge is always your best investment. Keep watching, keep learning, and keep growing your financial savvy. You can catch us again on our YouTube channel. I'm Will Ibang. Thanks for watching. I'll see you next.